Rent prices have been skyrocketing, and if you rent your home, the bad news is if you go to renew your lease, chances are you're gonna have to pay more money for your lease. What's up, everybody? I'm Jaspreet Singh from the MinorityMindset.com, where money minds rethink rich. CNBC just put out an article titled "Rent Prices Are About to Go Up Again." To put the rent increase in perspective, back in 2017, 2018, and 2019, rent prices were going up. In the first half of each of these years, the average rental price in the United States grew by right around 3.3%. But now if we fast forward a little bit to 2021, during the first 6 months of 2021, rental prices, the median rental price in the United States grew not by 3.3%, but by 11.4%, and it doesn't look like this number is going to be slowing down anytime soon. That means if you rent your home or if you rent your apartment right now, it is going to be more expensive for you to rent your home or rent your apartment because of the housing market and because of the inflation that we're seeing right now. The article says rent is surging for a number of reasons, including more certainty in the job market and young people finally moving out of their parents' basements. These rising rents mean that you're going to have a big chunk of America that are now going to be spending more than 30% of their income just on their rent, which is going to make it harder for them to have money to spend other places. So let's talk about what's going on. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. And if you haven't already, be sure to join our free Discord server called the Guac Talk Community, because as we all know, extra guac is truly a symbol of extra wealth. And in this community, you can chat about the real estate market, the stock market, the cryptocurrency market, and all things building wealth. This community is completely free, and you can chat with and network with other minority mindset thinkers. So if you want to join our free Discord server, I'll put the link to where you can do that in the description below. Unlike what most people say, renting your home isn't always a bad thing. I mean, it's better for some people to rent a home than to own a home, and just because you're renting a home doesn't mean that you can't afford to own a home. You have a lot of quote-unquote experts out there talking about how owning your home is the way to build wealth, because now your rent is not just paying off somebody else's mortgage, you are using your monthly payment to build equity in this home. But how many rich people have you heard talking about how they got rich by buying their home? The home that you're living in can make you money if you sell it for more than what you bought it for. But the problem with that is now you have to sell your home and you have to move somewhere else. And a lot of times people start to make their home buying decisions based off of what it would be if it was an investment, instead of really understanding what their home really is. If you can comfortably afford a $400,000 home, you can afford a 20% down payment, you can afford the monthly payments, and it's not really going to put a lot of pressure on your finances. But then me, as the banker or the realtor, I tell you that your home is an investment. So you really want to think carefully about what kind of home you want. Now you might second guess yourself. Maybe you'll say, maybe instead of putting 20% down, I should try to only put down 5%. Now you can buy a much bigger home and you're gonna stretch your monthly payments. Sure, you can still make the payments. This is gonna stretch you a little bit more. And now instead of you putting more money aside towards your investments to buy rental properties that are gonna pay you with cash, or instead of investing money into the stock market or to other assets that will actually pay you for owning them, now you're just hoping that your home is going to grow in value, that when it comes time for you to sell, you're going to have more equity in your home. There's nothing wrong with owning your home as long as you own a home that you can afford, and there's nothing wrong with renting a home as long as you're investing the rest of your money. The mistake that so many young people make is that they'd rather buy a home than they would a rental property. If you want to really become wealthy and you want to use your money as a tool to become wealthy, go out and buy a rental property before you buy your first home. Now that I'm done with that rant, this brings me to the issue that we're facing right now, where rental prices are surging. If your lease expired in 2020 and you went out to go find a new home, or you renewed your lease, chances are you might have been able to get a free month of rent, or maybe you were able to get a huge discount on your rent. There was a lot of people that were out searching for homes and they were able to get 30-40% discounts on their rents because 2020 was a crazy year and nobody knew what was going to happen in the economy or the housing market, and so landlords were handing out discounts on rent. See, back in 2020 you had a lot of supply of rental properties but not enough demand, because back then a lot of people stopped making money, and so landlords were doing anything to get somebody who had a paycheck willing to pay them rent. Now the dynamic has shifted. Our economy has improved a lot since 2020. It's not back to where we were back in 2019, but it's improved a lot. But the bigger issue is right now you have a lot of people looking for homes, whether it's to buy or to lease, and you don't have that much inventory available out there. Even if you go out to look for a home to lease, there's not that much inventory out there. It's the same issue you see in the housing market when people try to buy a home. If you're listing a home for sale for $300,000 and then all of a sudden you list your home and 2 days later you get 45 offers, well then you're gonna say, hey, we have multiple offers. Please submit your highest and best bid by Monday, and then we'll pick the best offer. And then people are gonna say, oh, I really wanna get this home. Maybe instead of offering $290,000, I should offer $310,000. And somebody else offers $330,000. That's how you start boosting home prices, because now you have more demand than there is supply. So now the buyers are fighting against each other with higher prices, which pushes home prices up. You're seeing the exact same thing in the rental market, where you don't have that many homes available for lease, and so renters are having to fight against each other by paying more money for the leases in order to get into a home or an apartment. Part of the reason for that is people wanted a change of home. Now, because of this pandemic, people have the ability to work from home, and so people started buying homes with a yard and with an office, but it's the same with tenants. You have tenants that are now wanting more space because now they can work from home, so they moved out of cities, they're moving into the suburbs, they want a yard, they want some more space, and so people have been shifting into these homes, which means you've had a lot of tenants looking for these properties with not that much inventory, which has pushed rental prices up. And you also had a lot of young people, when the pandemic hit, move into their parents' homes. So the requirement for inventory really decreased, and now it's increasing because people are getting their jobs back, they're starting to get an income again, they're starting to feel more confident about the economy and the world, so now they're moving out and they need a place to stay, so you have more demand out there looking for these properties. Going back to the article, Nicole Bashoud, who is a market analyst at Zillow, predicts that some of the most affordable places in the country, especially in the Southwest and the Sun Belt, including Austin, Texas, Las Vegas, and Phoenix, will become some of the least affordable by the end of the year given the demand. And what's more, quote, we don't really see rents dropping again in the near future. You might think, hey, if rental prices are going up so much, then people should just go out and buy homes, which would make sense. Except home prices have also skyrocketed. And so these higher home prices actually support higher rental prices, because if people could save a lot of money by renting their home than by owning a home, then you'd see more people go into renting. Likewise, if it was way cheaper for you to own a home than rent a home, then people would stop renting and go to ownership. What this means is the cost of living is going up. Doesn't matter if you're buying a home or if you're renting a home. It is more expensive to live somewhere in the United States than ever before, and this trend doesn't look like it's slowing down anytime in the near future, at least. The tricky thing though is, how sustainable is this? Because wages have not been keeping up with the rising cost of living. The fact that we're seeing 10% growth in housing prices in less than a year while wages are nowhere near that tells us that, hey, housing costs are growing like this while wages are only growing like this. So eventually you're gonna hit a point where people just can't afford to rent a home, or they can't afford to own a home, which means that people are gonna have to downsize, which is not so good news for the economy, which is something that could create a very weird dynamic in our economy if something doesn't change. I will talk more about this, but the thing that you have to understand right now is the person that's benefiting from this, again, is the people who are financially educated. It is the asset owners, the investors, the people that own the rental properties, because now when rental prices go up, well, that benefits you because now you make more money in rent. This is again why financial education is so important, that way you know how to use your money as a tool, that way you can benefit from the way the system works instead of being the person that's just paying the price. Now, if you don't have the ability to go out and actually buy a rental property right now, then the next best thing is to do something like crowdfunded real estate, because the way crowdfunded real estate works is you invest your money into a fund, and then this fund gives you exposure to a portfolio of real estate, and then when these properties generate rent or they appreciate, you get your share of the profits. The nice thing about crowdfunded real estate is now you don't gotta worry about dealing with tenants, you don't gotta actually find the property yourself, and you don't gotta worry about the day-to-day headache, and in exchange, you're still getting exposure to real estate. One of the easiest ways to get exposure to this type of crowdfunded real estate is by using our sponsor Fundrise, and I'll put their link in the description below. The way it works with Fundrise is kind of like what I just said. You can invest as little as $10, and now you get exposure to real estate, and then when these properties that you have exposure to pay rent, or when they appreciate in value, you get your share of the profits. And I do gotta give you a little bit of a disclaimer, because at the time of me recording this video, I've had some of my money invested with Fundrise for a number of years now. So if you do want to learn more and see how you can start investing in real estate through crowdfunded real estate, I'll put the link to how you can learn more and start investing with Fundrise in the description below. The only way rents are gonna start going back down is if we see a shift in our housing market, because right now we have more demand than supply. When you have more demand than supply, you have more buyers, more renters, than you have inventory, which means that now the buyers, the renters are having to fight against each other to lease a home. But if this switches, where you have a lot of homes listed for sale or listed for lease, and then you don't have that many buyers or tenants out there, well then now the landlords, the property owners are going to have to fight against each other to get a tenant, which means now they're going to have to cut their rents to make the property more attractive for a potential tenant. The way that you can see that happen is, one, if we see a whole new inventory of homes created. Maybe that means we're going to build a whole lot more homes, or we're going to build more apartment complexes, or maybe that means that you're going to see a lot more investors start buying up properties, and now you have a whole lot more homes listed for rent. But in order for that to happen, you'd probably see home prices jump up even more, because now you have all these investors trying to buy homes. The second thing that could potentially cause a rental price correction is if now rental prices are so high to the point where people can't afford rental prices anymore. This is kind of the same issue that we've been seeing all around us, where if you go to the grocery store right now, you're going to see the grocery prices are way higher. If you go and buy a car right now, you're going to see the car prices way higher. If you go and you try to buy a vacation, you're going to see that flight costs are way higher. So right now the price of everything is way higher, partially because people have the ability to pay it. But eventually we're going to hit the point where people can't. People won't be able to pay rent. People won't be able to buy all these things. And when that happens, something is going to have to correct, because if businesses are not able to sell their stuff, if landlords are not able to lease out their properties because it's too expensive, then they're going to have no choice but to cut the rental prices, because otherwise your properties are going to be sitting there vacant and businesses' inventory are going to be sitting there idle with nobody buying it. And this is the thing that a lot of people are worried about, especially now as we're starting to see the government money start to fade away. We're starting to see the unemployment programs starting to fade away. We're starting to see the free government money starting to fade away. So now as this is happening, what's going to happen? Are people going to be able to support themselves on their own two legs? Are we going to see people go back to work to get an income to be able to support this? And are the wages going to be able to support the higher costs, or are they not? This is something that every economist is glued to the edge of their seat to see what's going to happen, because if now people are going back to work and they're not able to make enough money to pay their bills, they're not making enough money to pay their rent, then this could create a real shakeup in the housing market. Because now if you have people buying properties highly leveraged, assuming that they're going to get these rental prices that they're getting right now, and then they're forced to cut rental prices, well then that could create a problem. Because now they might not be able to pay their mortgage payment. They might not be able to pay all their fees because they're not making enough money to pay all their fees, because they expected to make this much money, but they're only making this much money. So this is the thing that a lot of people are really worried about. Because if people are not making enough money to pay their bills, to pay their rent, and to live their lives, well then that creates a whole sort of economic disaster. Until then, rent prices are probably going to keep going up. They might not go up at the speed that we saw in 2021, but they'll keep going up until we see something change. If people go back to work and they're making more money and wages go up, well then that means rental prices will continue going up, because now wages are going up too. Sure, they might not be keeping up with rental prices, but if wages keep going up and people still have the ability to go out and spend, and they have the ability to pay for their rent, then that means the rental prices will probably keep going up too. The key for what's right for you, whether it's renting or buying an investment property, depends on your financial situation. If you can afford to buy a home and you want to buy a home, then go out and buy a home. If you cannot afford to buy a home, or if you don't want to buy a home, then rent a home. You just got to understand how the system works and make sure that your rent fits within your financial system and you're not stretching yourself too thin because of your rent. Thank you for watching. If you enjoyed this video, here's the video on things you need to know before you buy a home that I think you'll love. And while you're at it, download our free guide on how to start generating passive income. And as always, keep hustling. The three main factors that a lender is going to look at when it comes to getting you pre-qualified and getting you a mortgage are your credit score, your income, and your debt.